name is Fred Peplow, and this is Cash MIB, or Cash More is Better. And it's a website for businesses that are looking to manage their cash better. And that's my whole goal of doing this, is to help you run your business better and to have more cash at the end of a month, quarter, or year than you might have otherwise had by stopping the leaks of cash flowing out of your business. So we've already discussed 2 laws of cash, and there are 5. So today we're going to discuss law number 3. Just to review, law number 1 is that cash is neutral. Doesn't care where it came from, doesn't care where you send it. You have complete control. And you can use that money when it comes in from one product line, one division, whatever, to do whatever you want, something totally unrelated to where it came from, if that's how you choose to manage it. And your vendors can do the same thing, and your customers can do the same thing. So when someone tells you they don't have the money to pay you, things like that, well, there's money. They've just chosen to put it somewhere else, and based on their value set and pressures that they have at the time. So that's the first law of cash. Second law of cash is spending money on things that you sell tends to multiply the value of your dollar. Buy something for $1, sell it for $2, you multiply the value of that dollar for your business. That's a very good thing. Today we're going to talk about law number 3. Law number 3 is that when you spend money on something that expires, it does not add value to whatever it is that you're making. And for example, if I want to make this coffee cup, and as long as I make this coffee cup and it's white and it's the right size and good quality, I can sell this coffee cup to a lot of companies. Okay. Once I put a little green paint on the top and the bottom, I've excluded all the people who really want red or blue coffee cups because this one is green. And even more exclusion is when a logo gets added to the coffee cup. This happens to be a Michigan bank called Chemical Bank. And they gave me this coffee cup so that I could show it to you. And it's an example of how we add a cost, the paint and the labor to paint it, to an item, but it reduces the value of that item. And there aren't any bankers out there who will loan on inventory value based on overhead being added to it. So things like rent, property taxes, electricity, they really don't add value to your inventory. And remember, there are 3 financial statements. 1 for your daily operating decisions, 1 general accepted accounting principles for the bank, and 1 for the tax guy. We're talking about the one that you use to run your business. Period costs need to be expensed in the period that they're incurred, not put on the balance sheet. Makes your income statement look better, but it's a bunch of hooey. Don't do it. The last thing I want to share with you has to do with contracts. All businesses have little contracts for copy machines, employee uniforms, garbage pickup, and so on, that have a 3-year term. And you don't like doing that, so you negotiate hard and get the vendor to give you a big discount so that you'll sign a 3-year deal. So you sign on the dotted line, and everybody thinks you're really proud of yourself. Well, in the fine print of that contract is likely a paragraph that says when that 3 years is up, you have to give them 90 days notice or 60 days notice to change any of the terms or to go to a different vendor. Otherwise, that contract automatically renews at the then going rate. So if you negotiated a 20% discount today, 3 years from now, if you don't make any changes, forget to call them, you're going to go in at, that contract's going to renew at 100% for the next 3-year period, whatever it is. So you really have to be careful with that. So we'll put something, some suggestions in writing directly below this video on the website, and we hope that this has been interesting and of value to you. And come back again soon for the law of cash number 4.